Good morning, everyone. In this short session today, we are going to talk about some new dimensions of business valuation. So, new dimensions of business valuation. The moment I use this term valuation, the things that come to our mind are the capital structure of the company, techniques based on discounted cash flows, the economic value added, and things related to profit and balance sheet and numbers. Having said this, if we look at the corporate scenario in India for the past 1 year or more, we see that companies which have had very good valuations have had very big scams as well. If I give you an example of banks like Punjab National Bank, ICICI Bank, they are well aware of the issues that have happened over the last year. The Punjab National Bank scam, in which the person was given the fraudulent letter of undertaking. Because of this, the scam resulted into a scam size of 13,000 crores. The ICICI Bank issue, in which the management was alleged of having granted loans and then having written off the bad debts to hide the NPA in the bank. The scam size was 3,250 crores. To further give you an idea of the effect of this scam, the net loss of Punjab National Bank was 940 crores and ICICI Bank showed a loss of 120 crores. Because of these scams, the share price of these two banks resulted into a downfall of 8 to 10%, which eventually resulted into the shareholders' loss to the tune of 10 to 15,000 crores in each bank. In each of these banks. Now, what was the issue actually? So whose responsibility is this? Or is it the flaw in these valuation system? So when we talk about these valuation models, most of these valuation models focus upon the financial valuation and the balance sheet figures. What about the remaining stakeholders? If we have a look at this business valuation models, the entire focus is on only one stakeholder, that is the shareholder of the bank. But there are other stakeholders as well. So now, which are these other stakeholders? Stakeholders like the society, the environment, the community, or the employees of the company, etc. So when we talk about these stakeholders, we actually do not have any valuation models as of now which focus on all these stakeholders also. So now we need to dig into a different domain. We need to leave financial valuation aside for a while, and we need to dig into a different aspect, that is the business ethics models. A look at the business ethics models, the very basic models that we know, the utilitarian view of business tells us, utilitarian view, we have this theory, then we have deontological theory, which says the utilitarian view of business ethics tells us what a business should do good and what is not good. So it says that any outcome which is good for the larger society is good for the business also. The deontological theories, on the other hand, do not focus on the outcome of the activity per se. It focuses on the action of the business. So it says that each action of the business has to be ethical. Now, having said this, there are other theories also. Then we have apart from these basic philosophies of ethics, we also have concepts in business ethics like corporate governance. Then we also have topics or the philosophies like corporate social responsibilities, which tell the companies should do some good for the society and environment as well. But then, as we can clearly identify, and corporate governance and other issues. As we can identify, either the models are based only on some social activity or they are based only on some financial activity. So we actually in the literature, we lack a proper model which is integrated, which is a holistic model and which can consider all the aspects of business. So today I introduce you to this business model, valuation model, which was introduced in 2008 and which is relatively new in the business literature, and a lot has to be done, but the concept, I'm sharing this with you. In 2008, Professor Raj Sisodia shared this idea of conscious capitalism. What this conscious capitalism means is every business should strive towards becoming a conscious business. And what is this conscious business? So before I explain to you what a conscious business is, it actually strives at understanding that profit is not the only motive for an organization. There is something more that the organization should strive to do. So what is that more? This is something that has been shared in this model of conscious capitalism. So this business, this concept of conscious business rests on 4 basic pillars. The first pillar of this conscious business is a higher purpose. Every business should have a higher purpose of its existence. So how does this higher purpose explain? We all need red blood cells. So, but the purpose of our life is not to produce red blood cells. The purpose of life is something more. In the same ways, every business needs profit, but the only purpose of the business is not profit making. So there should be a higher purpose. The second pillar is the stakeholders. A conscious business should focus not only on its shareholders, but employees, society, community, sustaining ecosystem, suppliers, and investors also. The third pillar is ethical leaders. There are 2 characteristics of ethical leaders. One is these ethical leaders focus on we instead of I. Second is they act as servants of the company, not owners of the company, and thus they facilitate the general good of employees and society and everyone in general. The fourth and the very important pillar is culture of the business, of the company. The culture has to be of love, trust, respect, and general good. So when a company, this culture is actually the unifying force of the company. Now this model, if we look at this, it incorporates the financial aspect in terms of investors. So conscious business is a business which takes care of its investors. It also takes care of the rest of the stakeholders of the who are associated with the company. So this model of conscious capitalism, it actually is an attempt to merge the hardcore finance valuation with the business ethics, or how a conscious business should be. Perhaps this is something which our Indian ancient Indian literature, the Vedic literature has always been guiding us to. So perhaps this is the way where you can lead the organizations into such a way that they understand that profit maximization or the share price maximization is not the only objective of a business. There has to be something more to it. So this is about conscious capitalism. It certainly has a limitation, and that limitation is there is yet to be a mathematical model which has to be developed about this. So perhaps in coming future we'll have a mathematical model which helps us do a valuation of a business on the basis of the conscious activities it does. Thank you.